Hello and welcome to the new summary of the most important market events from the past week. It was a challenging week, but it's great that it's behind us now. For all the new subscribers, I just want to clarify that if you check my older materials, you might notice it's not in English. However, don't worry, all new materials will be in English moving forward, so feel free to subscribe. In today's review, I will cover weekly performance of the traditional and crypto markets, analysis comparison of miners CleanSpark and Marathon, price predictions of Marathon and CleanSpark, which of course is not financial advice. Then I will comment about new employment data, and for the end I will comment on some upcoming weekly events. The S&P ended the week down by 2%, bringing it about 5% lower from its previous all-time high. It will be interesting to see whether the markets can rebound as we approach January the 20th, when the new US president will officially take office. This transition could bring new economic policies and investor sentiment that may influence market direction. The total cryptocurrency market capitalization saw a 5% decline last week, now sitting at approximately 3.2 trillion. Bitcoin is currently hovering around the 94k level, experiencing a 4% drop over the past week. Meanwhile, major altcoins such as Ethereum and Solana saw more significant declines, falling by 10 and 12% respectively. According to the insights from the analyst Marty Party, there are several potential scenarios for Bitcoin price movement. He suggests a 5% chance that Bitcoin could fall below the 74k level, a 15% chance of dropping below 78.5k, and a 45% chance that the price could go lower than 90k. However, there's a 35% chance that Bitcoin will hold the critical level around 94k, which is currently on the trend line, and continue to rise from there. These days, there's a lot of FUD surrounding Bitcoin miners, which isn't surprising given the recent market downturns. To put things in perspective, I decided to analyze some key operational highlights from October 2023, along with the latest reports for CleanSpark and Marathon miners. Let's begin with CleanSpark's price movement. In October of 2023, the lowest price was $3.38. Whereas the current price has surged to around $10. This marks more than a twofold increase compared to the same period last year. Moving on the hash rate, CleanSpark current value stands at 39.1 exahash per second, up from approximately 10 exahash per second in October of 2023, almost a threefold increase in just over a year. Now let's talk about CleanSpark's hodl bag. In October 2023, they held 2,311 Bitcoin. Fast forward to today, and that figure has soared to 10,097 Bitcoin, reflecting an impressive increase of over 330%. During this period, the number of shares increased from 184 million to 292 million, representing a 59% dilution. While this might seem significant, the growth in their operations has outpaced this dilution, which is a positive indicator. Efficiency is another crucial aspect. In October of 2023, CleanSpark mined 633 Bitcoin. By December 2024, this number rose to 668 Bitcoin, a 5.5% increase, even in the face of reward halving. This demonstrates the company improved operational efficiency despite challenging conditions. Lastly, when examining how much of the CleanSpark market cap is covered with the value of their hodl bag, the numbers are striking. Using Bitcoin's peak price from October 2023, 13% of CleanSpark's market cap was covered by their hodl bag at that time. Fast forward to today, with Bitcoin priced at 94k and CleanSpark expanded hodl, 32% of their current market cap is now covered by their holdings. Before diving into price predictions, let's take a closer look at Mara's operations. In October of 2023, Mara's price hit a low of $7.16, while the recent price stands at $17.86, an increase of 1.5 times. Their hash rate has seen substantial growth, rising from 19.1 exahash per second in October of 2023 to 53.2 exahash per second today, representing a significant delta of 1.8. One of the most impressive aspects of Marathon's performance is their hodl bag. Currently, they hold 44,893 Bitcoins, a notable increase from 13,396 Bitcoin in October of 2023, reflecting a 2.35 times increase. However, they have also diluted their shareholders by 20%, with shares increasing from 267 million to 321 million during this period. A point of concern for investors has been Marathon's production efficiency. Their monthly Bitcoin production has decreased by 26%, from 1,202 in October of 2023 to 890 in December of 2024. Despite this drop, it's important to note that Marathon remains the largest Bitcoin producer among its peers. What makes Marathon particularly compelling in the value of their BTC holdings compared to their market cap? In October of 2023, their holdings covered 25% of their market cap. Today, with a significant increase in their holdings, the coverage has grown to an impressive 73%, a metric that's hard to overlook when assessing their valuation. Now, let's go into theoretical price predictions, while keeping in mind that all models are flawed, but some can still be useful. By analyzing the growth deltas of CleanSpark's fleet in terms of exahash per second, and their hodl back increase, and applying this to the price low in October of 2023, we can estimate a fair price. Based on hash rate growth, the fair price comes out to $9.83. When considering the hodl back increase, their fair price rises to $11.38. While these figures might seem conservative, it's important to remember that they each consider only one factor, making them theoretical floor prices. For a more optimistic scenario, we can ask what would CleanSpark share price need to be for their current hodl back to cover 13% of their current market cap, mirroring the October 2023 lows. The answer is $25 per share. By averaging these three deltas, we arrive at an estimated fair price of $15.40 for CleanSpark, representing a potential upside of over 50% from current levels. Applying the same logic to Marathon, we derive the following fair prices: $12.78 based on hash rate growth, $16.83 considering the hodl back increase, and $52 if we aim for 25% of their market cap to be covered by their current hodl back. Averaging these figures, we arrive at a fair price of $27.2, which suggests a potential increase of 52% from current levels. So which miner is better? It really depends on what you value most. If efficiency and using a hodl strategy for diversification are your priorities, then CleanSpark emerges as the better option based on the analysis above. On the other hand, if you are looking for a poor man's MicroStrategy that combines Bitcoin production with a steady, albeit less efficient operation, Marathon might be more appealing. Marathon offers the advantage of producing Bitcoin at a lower cost than the current market price, a strength MicroStrategy lacks because it can only buy Bitcoin on the open market. Personally, I believe the best approach is to own both, of course not financial advice, and let the market conditions determine the winner. Each company has its unique strengths, and diversification can provide a balanced exposure to the evolving Bitcoin mining landscape. Honorable mentions go to Iron for their efficiency and Riot for their substantial hodl back of over 17k and diverse operations, but that's discussion for another day. Last week we received several important job reports. First, job openings came in at 8.1 million, surpassing both last month's 7.8 million and analysts' expectations of 7.7 million. Then, initial jobless claims were reported at 201,000, lower than expected 215,000, and also down from the previous month of 211,000. Finally, we wrapped up the week with the latest unemployment report, which showed at 4.1% rate, slightly better than last month 4.2% and analysts' expectations of 4.2%. All these reports points to a stronger economy. However, based on the market's performance last week, it seems investors weren't thrilled with these results. It appears we are in a period where good news for the economy is actually bad news for the market. Why? Because stronger employment data could signal fewer rate cuts from the Fed, which, as we saw last week, could negatively affect the market. Currently, the probability of a rate cut is around 6%, while the chance of the Fed leaving rates unchanged stand at about 94%. This leaves room for a potential surprise rate cut, which could spark the next aggressive rally in the markets. Next week there are several key events to watch, starting with the financial quarterly reports from major companies like BlackRock and Morgan Stanley. However, the main event will be the latest inflation data, which will provide crucial insights ahead of the upcoming FOMC meeting. That's it for today, folks. I hope you liked my video. If you liked, you can subscribe and like it as a sign of support, and nothing. See you in next video. Bye.